You are listening to the Traders4ACause podcast.
Hey folks, welcome back to the Traders4ACause podcast. I'm your host, Zach Shellhaas, Executive Director at Traders4ACause. My guest this week is a good friend of mine, happens to be a supporter of our cause and our charity, and he is a retail trader and moderator and risk manager at TrueTrader, which you can find at truetrader.net. Ladies and gentlemen, I present Mr. Ricky Analog. What's happening, Ricky?
Thank you, Zach. Thanks for having me on, man.
Yeah. We've been trying to get this done for a while now. I think I talked to you probably this spring about coming on the podcast.
Yeah, I'm happy we can finally get it penciled in. I just finally getting over this stupid COVID.
So are you pretty sure that what you had was COVID, or even though you didn't get a test, did you?
No, I never ended up getting tested because the stupid wait list was like silly long. But honestly, like it really, in my opinion, it was like almost no doubt in my mind.
They say now, I guess doctors are even telling people like, if you have the following symptoms, just assume that you have COVID. That's how rampant it is. But I did look recently, at least in Pennsylvania, I know that cases are coming dramatically down from where they were just a couple of weeks ago. So hopefully this Omicron or whatever will go away as quickly as it came in. That one can only hope.
Yeah, one comes in and one goes out and a new one comes in, it seems like. So it's just this revolving door.
So Ricky, a lot of people know you for some of your YouTube content that you've done over the years, talking about fundamental analysis and, how to ignore noise and, cut to the core and cut through the bullshit, if you will. How did you get to the point where you wanted to start generating content to begin with? Let me follow the path from the beginning for you. What would you be doing right now if you weren't a trader?
That's a good question. Like I did used to run my own business, and I lost the passion for that industry, that business that I was in. And, thankfully I had trading, and trading was what filled that void. So like now, man, that's a tough one, because honestly, I have no idea what I'd be doing. I'd probably I have an uncle who's actually in the industry, and I feel like I've always had this interest in the market. So like,
okay,
if I wasn't trading my own accounts, I might probably be bugging him to bring me on.
okay.
Like I really do love the industry and just markets in general. Granted, what he does is like night and day from what most of us retail traders do. He runs a firm, like a Raymond James firm. And so that's much more macro. I'm 100% sure he's a long only fund. So like, I know when I see like the markets having these big corrections, like need to call in and check up on him, make sure he's doing okay. Cause
of course.
But other than the markets, man, my real hobbies and passions are like all things that revolve around being outdoors or sports. I'm big into hockey and skateboarding and soccer, but again, like those aren't the kind of things that are going to pay the bills.
Of course,
that's just what I like to do.
So what you're saying is that if you didn't trade professionally, that you'd figure out a way to make money skateboarding?
No, I would most likely find a way to wiggle my way into the industry, whether like an analyst job or something. I just, I still have that love for the markets.
So take me back to, we talked before about how we're very similar in age, and, we're going on 20 years now being out of high school and everything. What happened when you got out of high school? What did you do at that point? I mean, how did you develop your thirst for finance, your thirst for the markets?
Well, I took the slow route through college. I was like a 8-year bachelor degree. I'd switched majors like 4 times, I think.
Okay.
Originally, I wanted to do video editing because that was something I used to do through skateboarding. Used to like edit all kinds of skate videos. And so I ended up in graphic design and realized that like video editing is a very small part of graphic design. And so I was like, I don't really fit in here. And I ended up in like criminal justice. I thought maybe I wanted to be a lawyer, and then I switched to business. And then when I was in business school, I took a marketing class and realized I really, really liked marketing.
Mm-hmm.
And that was like what I ended up graduating with, a degree in marketing. I had a business that I was running on my own that put me through college. And when I graduated, the job market sucked. And so I graduated college in 2012. And yeah, the job, like I said, there wasn't a lot of jobs out there. And even the ones there weren't going to offer me better pay than what I was currently making. So I just continued to run my own business and actually merged it with my business partner, who was my best friend for many years, right? We're still best friends. I'm no longer part of the business, but that business, we grew it to a point where it was pretty close to passive income, right? We had a lot of employees that played key roles that made it so we could be hands off a lot of it. And so that gave me the time to kind of pursue some sort of passion outside of the business. Same with my business partner. And I chose the markets.
So what was the business? So that's the second mention.
It was online retail.
Okay.
We had some contracts. I was in Hawaii. And so I had contracts with a lot of businesses in Hawaii to help them monetize inventory and stuff through e-commerce, because a lot of people in Hawaii moves at its own pace. Like Hawaii's like its unique
slow.
little, yeah. And so like there's a lot of opportunity there if you understand that. And so, we had a lot of contracts with businesses that we helped do that. And yeah, so we ended up with like a warehouse there, a warehouse in Kansas City, a warehouse in Northern California. And like I said, had some key employees that were trustworthy and able to keep things running while I decided to learn a new skill.
And that skill became retail trading, essentially.
Yeah, it's funny because it started out as me reading books like The Intelligent Investor and like Security Analysis, the most dry, boring book ever. And like I totally thought like that's what trading was going to be like, was more like investing.
Right.
And then I got my first taste of trading my own accounts in 2000. I want to say it was 2013. It was the first pot stock boom. It went terribly, right? Like I literally I found Twitter and like realized people were pumping their trash on there. And I was like, cool, you just buy these things that people are talking about. And it was all OTC crap. And I literally bought the top of the whole pot stock market and just watched all our accounts get cut in half in like a month or something, maybe worse.
Baptism by fire.
But I knew people back then, like I'm sure you're probably familiar with Psycho on Wall Street. Jesse, sure. He's a good dude. He started around the same time. And I remember his story standing out to me because his story was he had the opposite experience. He grew I don't remember if it was like a $40,000 or $50,000 account into like hundreds of thousands of dollars, right place, right time. And, when that happens to you, you kind of get this ego that makes you feel like it was you and your wisdom that grew that account, not really knowing it was the market. Sure. And so like I had the opposite, right? Like I just got humbled immediately. Like right or
probably
wrong.
Better. It's probably better to have that experience up front.
That's what I think. That's exactly what I think. I think it was a blessing that I learned the hard way immediately.
Right on. So how did you do in 2021?
I did really good, but it was very similar to 2020 for me, where actually 2020 was really tough, even though I did really well. But there was still, like at the end of the year, this year in review where there was just a few trades that got away a little bit. And it's like every single year this happens, right? We make these plans to cut those few bad trades out of your year, your calendar year. And they were still present in 2021. Just few trades got away, and it would have been like the difference between a tax bracket. But I mean, it's okay. And in fact, I went through like October was tough for me. I took back-to-back hits 2 consecutive days that were like really big hits for me. And I had been going through some health issues where for like 2 years I'd been seeing a doctor trying to get them to diagnose whatever was causing me to have these it was like some abdominal pain issue, right? So like I was scared liver cancer, kidney problems, something. I don't know. I had a lot of pain. And for 2 years, they couldn't figure out what was wrong. They literally ran every test and they kept coming back and like, you're healthy, you're healthy. And I was like, dude, I don't feel healthy, right? Something's wrong. And then finally, they started asking questions about what I do for a living. And then they started to have these like aha things going like, you probably have anxiety or anxiety related health issues. And it really kind of caught me off guard because I never had even thought that that might be a possibility. And so when I took like those big hits in October, me personally, I don't know how everyone else copes, but like everybody has a way of coping, right? My only mechanism to cope with those kinds of like really lows in my career is to like bury my head deep in the data, right? Like to really do a deep dive. And I realized that even though I've been a profitable trader for, I was going on like 6.5 years of profitable trading. I'm on my 9th year now of total trading. Even though I had like defined my system and my strategy and what it is that my core competency is, there was still a lot of what I did that was discretionary. And what I realized is like, with that much discretion, there's still a lot of stress we put on ourselves, whether you realize it or not. It's just part of the business. And we do it for so long that we don't even recognize it. We just think that it's normal, right? Like, honestly, I wasn't paying attention to the amount of stress I was putting on my body. But in hindsight, it's so obvious. Like, so what I did was I literally dove deep into the data and realized I needed to define everything about what I do. And I mean, everything. Like, there's nothing about my system now that is left to discretion for me personally. And so it's like night and day, the mind state that I have when I trade. So an example would be, for the last 6.5, 7 years or whatever, even though I was profitable, those 30 seconds counting down before the bell would ring, I would feel like a wave of anxiety rush over me, because there's this lingering uncertainty of, oh crap, is today going to be the day where I take a big hit? Like, even though you know how to manage risk, there's still these unanswered questions that now that I've defined everything, when the bell's about to ring in the morning, I literally am smiling ear to ear and I feel almost like giddy, right? Like, I'm just like, bring me as many opportunities as you can. I'm ready. My job isn't to make decisions. My job is to just do what my system tells me. And so
trust your process.
Yeah. And it literally overnight almost evaporated all that anxiety. And it's just been an amazing transformation. That was just, trading for 9 years. You don't have aha moments quite as often as you used to when you're earlier in your career.
Of course.
It was one of the biggest, if not the biggest, aha moments of my career. And it was just last October. So, we're starting February here, and I'm in a really good place. So I feel really, really good.
That's amazing. And just the fact that you've established, a systematic way of trading that can, kind of relieve that level of stress. That's incredible, because most guys don't have that,
Well, and it's not necessarily for everyone. I definitely preach it to everybody that'll hear me out on it, but you have to figure out what works for you. And like, personally for me, I have little kids and I live on the West Coast. So they typically like to wake up right when the bell rings. And so
right.
if you don't have everything defined and you feel like you put a trade on and you're on edge of your seat, your teeth are clenched, your muscles are tight, and you're breathing really shallow, kids making a bunch of noise in the background is like just compounding the stress.
That's like nails on a chalkboard. Yeah.
But they don't deserve their father to be that, stressed out and focused on something as, it's important, right? It's our job. It's how I provide for the family and stuff. But at the same time, like, priorities, right? And so same for my wife. And like, I always tell people this: if you have a wife or kids or even just a significant other that is your support system in your journey to be a trader, you should never take that for granted, how important their support is. Like, without their support, it's not going to be a journey that is very easy to make, right? Like
Sure.
the support of your wife or your girlfriend and your kids, the last thing you want to hear is them be like, I wish you didn't trade, right? Because so for me, that was another end goal when I did that deep dive, was to come out the other side with something that allowed me to be a much better husband, a much better father, and healthier. So
good for you, man. That's
thanks.
great. That's just such an accomplishment. Kind of segues into another question that I have. I mean, if you're truly a systematic trader and you've kind of taken discretion out of the mix, how do you feel about the idea or the notion that without taking big risks, there's no great reward? Like, do you view trading for you as, trading basically for a living, or do you view it more like you want to develop personal wealth? Like, how do you approach it? And it seems like the guys that, in my experience, the guys that really get to a level where they're, buying vacation homes, they're also willing to basically throw their guts out on the desk. I mean, do you view it, even if you take it systematically and as a grind, do you feel like you can reach that level as a trader?
Yeah, big time. And like, that's another one of those things that, prior to October, I might not have acknowledged. But when you see the system and the way that even though it's systematized, it's still affected in the same exponential manner from compounding, right? So like, I know what my win rate is and the risk reward associated with my average trade. And, as the account grows, the risk grows. And so like, I don't have to over risk on any given setup. Now, that doesn't mean that I won't put more risk on when the setups are there that call for it, right?
Mm-hmm.
But at the same time, I'm much more focused on cutting out anything that's even B minus, right? Like it's quality over quantity. And for me personally, one of my mentors is Adriano over at True Trader, and he's been a big influence on me. And one of the things he's always said that really stuck with me is like, what are you even doing in a trade where you can't take full size? Like, what does that say about the setup, right? And so that's something that stuck with me. And, I keep that, in the back of my head when I'm putting trades on that fit my system's criteria, that if the system says we go, we're not putting on a half position. We're putting on the full position with the set risk, and the market will do what the market's going to do. And, the best thing that comes from that is the ability to completely remove any feeling of like my personal value being attached to the outcome of the trade. If you feel like there's a bunch of discretion in the decision-making process, then you very well may internalize the outcome as something to do with you. And it's funny, like I said, I've been meeting with a lot of the tag groups in our community, and I've been kind of probably overusing this metaphor, but I love this metaphor. And that is, it's like the Homer Simpson, where, that guy is nowhere near qualified to make decisions about nuclear power, but he 100% is qualified to push a button when the system says push this button. Same way, I'm not qualified to talk about the intrinsic value of Netflix. Like, even the guys that get paid millions of dollars to do these analyst jobs are wrong all the time.
Sure.
So like, there's nothing out there that makes me think that I'm going to have some sort of crazy insight to some market related stuff that's going to somehow generate me profits. But my system can, and my system can do it agnostically with no kind of worry about any of those outside inputs, right? And
sure.
People can debate all they want whether the market is random or not, but the thing is I feel like if you have that debate, if you are saying that the market's not random, is the reason you're saying it because you're scared you can't make money if it really is random? Because like, my counter argument to that would be that like, you definitely can still make money through the randomness. It's just a sequence of if-then statements. And I mean, that's where risk management comes in, right? Like, you can like go read up on Van Tharp, who was pretty much the godfather of risk management and position sizing. And he's done studies that would tell you, you could flip a coin, which is as random as it gets, and through risk management principles and position sizing principles can actually come out positive. And, we as traders have the upside of being able to actually wait for a setup to have a better than a 50-50 probability, put the trade on, and then just let the market do what the market does. Now, where people get into trouble is when they don't want to admit that it's not going to be one that goes in the W column, right? And then
Sure.
they fight it.
Let's go back to that coin flip. Okay. So I've heard the same thing about playing roulette at the casino, right? Like if you bet on black and every time you lose, you just double your bet, you'll always end up on top, but you won't end up on top by much. You could go on a run, but if you continue with the system, eventually you're going to lose and basically start over.
Yeah.
So
but what I'm not referring to the martingale stuff, which
right.
is, I think you're talking about where you just double up when you're wrong, right?
Right.
And that's actually probably one of the most dangerous things you can do in the stock market, because, the stock market can continue, never say something can't go lower, never say something can't go higher, right? But what it is alluding to is this ability to put a trade on, and if it starts to work, I mean, we can throw darts at a stock or a list of stocks, right? Lands on UPST and somebody calls up Mark Minervini and asks what they do. I don't know. but if we put the trade on and it starts to work, we can just try to let the trend pay us and let it work. And if it doesn't start to work right away, we can clip it quick and keep our losses small. And that's the ability to use, just let the stock work. It is random, in my opinion, at least. Like, I mean, again, we could have that debate, but to me, it doesn't matter, because through the randomness, we can still have if-then statements. And we know that a lot of times we are getting better than 50-50 odds, depending on what your system is and the setups that you trade.
How does the system deal or adapt with black swans?
Mine personally takes them completely out of the picture, because my risk is always predetermined. And, a lot of this stuff that I'm trading nowadays isn't the small cap stuff. So like, my stop's not getting skipped. I was
going to say liquidity stops. Could be an issue, right? I mean,
yeah. And so like, you'll see like a lot of the things I'm trading nowadays are obviously in the large caps, and I'm still taking advantage of emotional moves, because believe it or not, like, AMD or Facebook or Nvidia and Tesla, these names can make some moves that are 100% emotional, irrational moves. And we can look to get on the opposite side of those trades. And it's not a guaranteed win, but the probabilities are much higher that you're going to get that reversion. And so like, when I put these trades on, I have a hard stop in. There's not going to be a situation where my stop gets skipped. And so my risk is always capped. And, I'm fine stopping out every single time it takes me out, because I know through my back testing and the data that it's going to play out in my favor eventually. So
do you do it in the form of like a trailing stop order, or do you just monitor it? And
so personally, when I put on trades, I have a hard stop that's automatically placed. I have this neat little thing that was a gift from Alex Spazito. Thank you to Alex. It's just a stream deck, right? And
I have one. They're beautiful.
Turned it into hotkeys for my DOS. And nice. So like I have hotkey scripts, thanks to some guys. I think it's at Bear Bull Traders. Some guys over there figured out how to write these scripts for DOS. So it will calculate the position size to put me in based on where my stop's going. And I don't even have to do the math, right? Like a stock is spiking into my level. I just hotkey in, the stop's already put in there with the right position size. And so at that point, when I enter a trade, it doesn't mean that it's target or stop. If the trade starts to work, I will have a discretionary stop that comes down to above the highs of that level, so that, once a trade starts to work, my risk goes from a full R to a much smaller fraction of that full R.
Okay.
And that's like, that's why I like being able to just be full size, one entry, and then hit my targets or take it off. And that's another good thing about, the large caps is most people aren't trading accounts large enough that, you're going to affect the liquidity of these names.
So you've almost taken out, your personal analysis of risk entirely. Like you recognize something that meets your setup qualifications and you let the system basically carry the torch from there.
Yeah, 100%.
Wow, that's amazing.
You should
That's
see the difference between the guy sitting here now and the guy that was here before October, right? Like I used to put trades on and I didn't have like a hard stop, and I would still kind of, as long as a move would stay emotional, I'd probably stay in the trade and possibly even have an ad. And there's that guy that I'm describing, he would put a trade on and my jaw would be clenched up. I would, if somebody was making noise behind me, I'd, quiet back there, I need to focus. And it's like, why do I need to focus? It's not like the harder I stare at the level 2 or the time in sales, like it's going to all of a sudden listen to me and bend to my whim. Right.
yeah.
So that guy is far removed in the past. And like, I'm so happy with where I'm at now in my trading, because when I put trades on now, like I literally can put a trade on and just move straight on to finding the very next setup with no worry in the world about the trade I just put on, right? Like I know my stops there, I know my risk. Like one of the best feelings in the world is just knowing that the worst case scenario is like this predetermined loss, which is a math equation based on my account size, right?
Very interesting. So how do you determine, like, you enter, your system enters a trade at any given time when you deem that it fits the requirements to fit into your system. If it fails or if it triggers your stop, will you continue to look at it and try to do it again? And how do you prevent like all the razor blades, the cuts?
Yeah. So if I stop out, any trade that takes subsequently on the name has to be a completely new setup that's still valid for the criteria.
Okay.
But there are cases, there's like, Comcast, I think it was last week, mid last week or something, it pushed into a level where it was valid for me, and I had put the trade on and it took me right out. And within a minute and a half later was still pushing even higher into the next level of my interest. And the trade got put on. And what was funny was the outcome of that trade was a 3R win, and the first loss was a 1R loss. So I ended up 2R on the trade. And, it was as if, I'd like to say it was a great feeling and all, but like, one of the cool things about systematizing everything is it also, kind of dulls the highs, but it also keeps you from hitting those really low lows too.
Of course.
So, you keep a much more even keel with your mind state. So you're able to continue to just execute your trades.
Act like you've been there, right? I mean, that's
yeah,
kind of
100%. And, a lot of people, might not understand why that's a great thing, but I think if you're trading for the highs, the high highs and all that excitement, you might be in it for the wrong thing, right? So like, if you're an adrenaline junkie and you just live for that feeling of like, having that risk on and you're like on seat's edge, like go find somewhere else to get your jollies, and then, trade to make a living, right? Trade to have your career, and then go live your life outside of the markets.
No, I agree. In trading, generally, euphoria is as dangerous as depression. I mean, either one of them will get you in trouble without question. So you made this change just this past October, as in October of 21?
Yeah.
My goodness. So this is fresh.
Yeah, big time.
Really fresh. All right. So talk to me. I mean, I talked with Nate in the last episode. How do you see the market changed from the way that it was in 2020? I mean, we could state the obvious, but for you personally, aside from your implementation of this new system, what are you seeing different now than you were back then?
So obviously I think there's a little nuance to that question, right? Because we could apply that question to the small cap world, and you might get one answer, and like the large cap world would be completely different. 2020 was like gnarly for the small cap world. It's no surprise there was a lot of things happening in the real world that created the situation that caused the small caps to be the way they were, right? We had everybody losing their jobs or staying at home because of COVID, and the government's cutting checks, and people, online trying to search for ways to make money. And, there's always these people that chase the next shiny object, right? So they come into the market, and, you know, they're most likely the reason there's this whole 90% of traders fail statistic. Is probably 80% of them are the type of people that are coming into the market for the wrong reason to begin with.
Of course.
So that created some very interesting moves in the small cap world. If you were a short seller in 2020, you had your work cut out for you. And it really made sure that you had risk management. Like, if you were the type of trader that just added to the front side of a short move, 2020 was like your nightmare. Thankfully, like, you know, I've always been much quicker to cut losses than a lot of other people I know. Even though, like, I still have those trades that would hurt me from time to time. I never come close to having blowups, right? Like, that's not something I allow for myself. I think mostly because I have people that count on me, right? Like, I have kids and a wife. So I'm not out there YOLOing. But you know, 2021 kind of you know, it started out very similar to 2020, but like in 2020, fundamentals went out the window, right? Like, any kind of red flag you could find in an SEC filing mattered none at all. Like,
nothing. Right.
Dude, it was really a head scratcher for a lot of people. You would see people do like these really dilutive secondaries only to see the stock go higher, and then they do another secondary and then another one. There were like some companies, I think they got like 4 or 5 secondaries done, and, you know, now they're flush with cash, probably don't have to do another secondary for the foreseeable future. But like 2021 finally kind of brought us back to a point where, you know, fundamentals did start to matter again. We started seeing certain things have the reaction to them that you would expect. So, like, you know, people would do these offerings and prices would get crushed. And a lot of short sellers were like, oh, thank God, we're back. You know, we're back in business.
Back to normal.
Yeah. And so now on the large cap side, you know, 2020 saw the Fed go right back to like pretty much zero on the interest rates, just printing money left and right. And so, like, you saw the rebound from the March 2020 lows was just like a straight up move. And we
Insane
were just,
move. Yep.
Yeah. And we've been that way till just recent.
Sure.
And obviously, like, we've had a shift in the macro environment with what the Fed's posturing. And, you know, whether or not we go into a more longer protracted pullback, or if, you know, eventually we just find some lows here and start grinding higher, we'll see. But, you know, personally, I'm kind of leaning towards the short bias on any major pops back towards the all-time highs on the index. And there's a lot of stocks, you know, that I just day trading them anyway, right? So I have a swing account. So a lot of these longer view situations don't really affect me as much.
Of course. Well, you're a trader. You're not in the business of forecasting.
No, I mean, I'm not.
No, I mean, it's I've heard guys talk about it. You know, you can approach it one of two ways. You can try to predict the future, or you can just trade it accordingly.
Yeah.
And you know, if you try to predict it, you know, you're going to end up getting hurt.
Yeah. Tom Canfield comes to mind when I think of guys that I really like to have that same mentality, right?
Absolutely. So, I mean, it's always been your mantra, you know, in every time that I've heard you speak, and you've spoken at several Traders for a Cause events, you've talked about how technical is over everything. Technical is over everything. Is that still the mantra now with your new system of trading?
Yeah, big time. Especially, like, the funny thing is that everything about the system is based on technical stuff that's black and white that can be objectively observed. And there's still always that, like, you know, we're talking October, so I haven't been this systematized for that long a period yet. So there is still these times when I put trades on, or I'm about to put a trade on, and I can feel myself questioning things that are what you're talking about, more like fundamental, or, you know, aren't black and white, aren't objectively observable. And the system is screaming at me to take the trade. And like the old me, the guy with the discretion's going, but, and I'm like, just hit the button, you know, like
hit the button, right?
That's the cool thing about a system, right? Is that you're not supposed to insert your own ego into it, right?
Right.
Like if you don't trust the system and you can't take the trades it tells you to take, what's the point of the system?
Right. A very good point.
But it becomes that struggle, right? That's, at least for me now, that's currently the struggles that I deal with on a day-to-day basis, is trying to remember that, like, yo, even if you feel personally like maybe there's a reason to skip this trade, you don't get to have that say right now. Because I have, like, I'll skip trades that are valid, and I'll be like, but the price action, it feels like it's going higher or something. And then like later on, when I have to track that data in my system, it ends up on my spreadsheet, and the spreadsheet's just laughing at me. So I'm like,
I'm starting to
right.
think that you're kind of destined to become a quant guy.
Yeah, I'm getting there a bit.
I'm seeing that in your future. Well, that's great. I mean, psychological stuff, it seems to come into every conversation associated with being a trader. And, if you can find a way to kind of weed that out, I think that you're going to be all set, and you're going to actually extend your life by a number of years as well.
That's definitely the goal. I'll tell you one thing, man, is like, if you ask most successful traders, like, the reasons trading's so hard, it's most likely they're going to have some form of because human emotions make it hard, right? It's successful trading, or trading correctly, often goes like directly against what intuition or instinct might tell you, right? So like, well, oftentimes the best time to buy something is when it is scary as shit to buy it, right? Like if it's flushing like emotionally down into some levels, it's really hard to want to just step in front of that and buy it.
Catch the falling knife. Yeah.
Yeah. And like, now there's times when it is like when you're really early and you just need to admit it. But there's times when like it's coming into levels that if you can't, man up and put your trade on at these levels, you're missing out on the best prices, right?
Right.
And it goes directly against every instinct. And same with like the opposite side of, when you need to stop out but not wanting to because your emotions are telling you no, like taking a loss hurts, we like to avoid pain. And it's like those really deeply rooted psychological feelings and emotions we have are the exact reason the trading is so difficult. So like systematizing everything removes it. Right now, it doesn't make it so that you put a trade on where you caught something that's flushing and you just feel like instantly happy or like at ease about it, but at least you're at peace with the outcome because your system is responsible, not your personal value isn't attached to the outcome.
That's very interesting. So are you still primarily short selling? Is that like your bread and butter still?
With small caps. Yeah. So if I trade small caps, it's almost always from the short side. Every once in a while I will see like something happening on the tape or like a setup where it's a pretty obvious trap. And I can, kind of get in there. I oftentimes pike them because I don't feel too comfortable on the long side of a name that I know is trash. But with the large caps, I'm completely unbiased. Like it's long, short, either or all day long.
Would you view your system more contrarian? Like, are you typically going against the grain, if you will?
So the way I trade has, led me to find, I have to actually define all these different setups, and each one is going to be slightly different. So like I've kind of really narrowed it down to 16 setups, and it's 8 and 8, right? Long and short. Now, the majority of them are mean reversion trades, meaning taking the contrarian side, trying to it's more of a scalp mentality, right? I think there's like a negative connotation that comes along with saying scalp because people think you're looking for pennies, right? But to me, scalp is just talking about how long you're in the trade, right? It's like, if you're trying to join a trend, you might be in the trade the whole day, right? As long as the trend's working, you might be in that trade. But for me, scalping is I'm taking the opposite side of an emotional move and I'm taking the meat of the reversion. So for me personally, I do have quite a few of those 16 are mean reversion setups, but there are a few that are the exact same criteria has to be met. But the broader view of the trade is that it's joining the bigger trend. And those are ones where, I will end up in that trade as long as the trend is paying.
Interesting. So do you find yourself, if you are looking for that meat of the move, from a psychological perspective, if you leave a lot of meat on the bone, does that frustrate you, or you just take your win and you're happy with it?
Um, like one of the things that I feel I do really well is set targets, like objective targets. Um, and I think that's probably something a lot of traders struggle with, right? If they're just taking profits at an arbitrary level that doesn't really have a significant meaning or reason behind that target, a lot of times those people may find that they feel upset about their profit taking, right? Me personally, I know that the targets I have are objective and rational, and so like when I get my targets, oftentimes they're very, very good targets that don't leave much on. And when they do, it's usually just to the next time frame's mean, right? So like I personally use the 1 minute 20, the 5 minute 20, the 20 minute 20, I'm using the 20 SMA on pretty much every time frame, and acknowledging that when stocks trend, they like to trend on the 20 SMA on whatever time frame it is. So if I'm shorting a stock that spiked emotionally, by definition, it should have sped up away from the 1 minute 20.
Mm-hmm.
And so that first target's written in stone for me is the 1 minute 20. And when we get back to that, it's up to the author of the story at that point. Does it want to hold trend and continue on its way up, or does it want to seek the next time frame down, which for me would be the 5 minute? And so, I can always have a secondary target. Sometimes I'll take half at the first target, half at the second, and be done with the trade. But they're rational objective targets. And so like, regardless of what happens after, the system executed the way the system was supposed to execute. And again, has no bearing on me personally.
Very interesting. So are there any other technical indicators that you use other than your moving averages?
I use pivot points on lots of time frames. So like a lot of people may be familiar with pivot points. And if you, depending on your charting platform, most people are probably just familiar with the daily pivots, which are calculated based off the previous day's daily candle. But there's weekly pivots, monthly pivots, quarterly pivots, annual pivots. And, those are key levels for me just based on how those are calculated. And when I see major emotional moves into those levels, those become very significant levels for me, for my system. Moving averages, I throw VWAP on my chart just because I know everybody else has it. And, when I'm moderating over at True Trader, it kind of looks silly for me to not know where VWAP's at, knowing most of the people in the community are probably looking at it too. But it does play a much smaller role in my trading compared to what most traders out there might say. It's not that it doesn't play any role. I definitely would be lying if I said I don't pay attention to it. But
well, it becomes somewhat of a self-fulfilling prophecy if everybody's looking at it.
Doesn't everything?
Yeah. Yeah.
I mean, that's the same with the 20 SMA, right?
Of course. Makes sense. So coming from an approach, a more discretionary approach where you did a lot more fundamental analysis, I've interviewed a couple guys, notably JC with All-Star Charts, who claim that regardless of the market environment, that fundamentals really just aren't that important because everything that you need to find in the story can be found in the chart. What do you say to that? Do you agree?
Yeah, 100%. Now, like, people need to understand one thing, right? Like, when I talk about fundamentals, I feel like we probably are using a very loose version of that term, because like fundamentals, if you really want to be strict about the use of that word, is more geared towards reading a balance sheet and looking at a company's financial position and thinking in terms of like the macro. But when we typically talk about fundamentals in the small cap world, we're really just talking about SEC filings, right? And looking for red flags, because sometimes, if you understand what you're reading, you can actually identify a company's agenda before it even really plays out. And that is an edge, right? So it doesn't give you it doesn't just give you the answers to the test, but it definitely is a big clue about what may be coming. But again, it still has to always play out with the price action. So that's why I've always been that way, where I remind people that the fundamentals are great and everything. Like, it's amazing to dig and find some really cool things in the SEC filings. But if you ignore the technicals, you do so at your own peril. And like, I mean, I've seen a lot of people they'll, oh, XYZ has a $50 million ATM. It's an automatic short. It's gapping up, right? But the second the bell rings and the price starts hitting the tape, it's not heavy. It's literally like there's no selling happening, but they're just so fixated on this ATM and the fact that it's a short that they ignore all the technicals, and they end up just getting squeezed to death on it. And it's like, guys, the technicals got to line up with your fundamental thesis. So
Sure. Well, I think the argument to be made for technicals over everything is basically that there's always going to be somebody in the room that has more information than you do, and who is better at reading that financial report than you are, and can kind of understand the convoluted language better than you can. So, the proof is in the volume, the proof is in the chart. I mean, I guess it makes sense to me. Where I see it kind of like diverging a little bit is when you find yourself in a situation where you're capitulating out of a position because you're looking at the technicals and they're scaring the shit out of you. And fundamentally, it might be sound. So I'm reminded of just recently, I had my buddy Jay Mintzmeyer recommended some good, shipping stocks that have gone on a freaking tear. And I had some small positions in them just for shits and giggles. And when the market started to melt early, I guess it was early last week, I sold them. I got scared and I sold them. And then now they're back at highs again. So I said to him on that day, I said, this looks really ugly. I'm scared. I'm just going to bail out for now. I can always get back in. And I said, doesn't this stuff, I mean, like, he's got way bigger positions than I ever did. I'm like, doesn't this stuff kind of like freak you out? He's like, I'm a fundamentals guy. I don't even look at the day to day. I'm like, wow. I mean, that's incredible. I mean, I guess he looks at the technicals to, place his orders and get in, but he really is that, set and confident in his analysis that he'll just hold it. I was like, that's pretty incredible to me. So
yeah. No, I'm always in admiration of the guys that can do that stuff, right? Like, I'm never going to be the guy that tries to tell somebody that the way they do something's wrong, right? Because I mean, there's so many different ways to make money in the market, but it's just really, really important for people to find what works for them. Like every weekend I do like the Sunday prep for, I do it for True Trader, but like we put it out on Twitter and YouTube and stuff for everybody. But like one of the things I'm constantly like harping on is the fact that like I don't want people to come in and just try to piggyback the ideas. I want them to pay attention to the thought process and figure out how can they apply it to their own trading. Like sadly enough, I think a lot of people just ignore that warning and they try to piggyback ideas. But the thing is like, entries to a trade are a very small piece of the big idea. And so like, just because where I might be entering a trade doesn't give you any real insight into how I'm managing my risk, what the targets are, or where I would possibly say that the thesis is broken. And so, you got to figure out what works for you. And like I said, man, those guys that do the fundamental stuff and have that conviction that they don't really look at the chart that much, that's crazy to me, but dude, more power to them.
right. No. So does your system scale in, or are you typically like kind of like single entry points?
So for anytime the trade I'm taking is a mean reversion trade, it's full size one entry. When I want to join a trend is where I would actually be willing to put on a starter and add as it confirms, right? Because, for me personally, like the scalp trade, when you're trying to take that meat of the reversion, should happen. If you're right, it should happen quickly. It's not something that should, kind of dick around up at the highs and like maybe start to grind higher. Like if it doesn't revert pretty quickly from where I enter, most likely I'm wrong. And like, I'm not there to scale in. Like I'm there to put it on. And like, I say this to the room a lot is when I'm putting those trades on, I'm not there to like take half size, because what if it works right away? And then all of a sudden you're left with a tiny win because you didn't take your full position where your system said to. So I'm not in this to, I'm not taking trades to break even. My goal is not to make small wins. Like, I talk to a lot of traders, and there's so many guys out there, and I'm sure people listening will probably like kind of relate to this, but there's a lot of guys out there with 70, 75, 80% win rates, and they're not profitable. Like, people that have a 75% win rate and are not profitable are a dime a dozen. I got a 40% win rate and it's extremely profitable. And it's because I don't care about these predetermined small losses that happen when they happen. It's that when I'm right and they work, I've got my size, and I'd rather be the guy with a bunch of small losses and a bigger one or two big wins that just eats them up than the guy that's like, I constantly have all these small wins and then I have a big loss that wipes them all out. Like,
well, it would take a lot of paper cuts to kill you, essentially. I mean,
yeah.
That's definitely true.
But when you're joining trend, that's a different story, because that may not be something that unfolds immediately. It could be something that, it needs to sort of develop. Things have to kind of play out. And for that reason, I can put a quarter position, half position, whatever it be on. And when you start, like, if we're talking about a long, if it starts to make those higher lows, I can start buying dips and build into a full position. But if it never starts to make those higher lows, when I cut the loss, it's insignificant because I never had a full position, right?
Right on. No, I mean, a lot of the best traders that I know, they definitely lose more than 50% of the time, but yet they make money.
One of the aha moments from doing all the back testing and the data was the ability for me to, I built a spreadsheet that allows me to adjust risk as almost like a tuning button, right? And I could, I started with a certain amount of risk, and I had, probably what most traders would do is intuitively ask the question, what if I like gave it a little more wiggle room? Would I have a higher win rate, right?
Mm-hmm.
And I did. Like, the win rate went up, but it didn't go up significantly.
Mm-hmm.
So like when I loosened the risk, the win rate went up, but the expectancy came down.
Sure.
And I was like, whoa, wait a second. And so like one day, I was just kind of tracking data and playing around with stuff. And I was like, dude, what if we just tighten that risk up, right?
Mm-hmm.
And I started tightening it up. And as I started losing more often, the system started producing more profits. And I was like, what the, I actually did a Sunday prep where that was the title of the prep. It was lose more often, make more money. And it's, it was something that when I realized, I wanted to share that with everybody. I wanted people to realize, stop being so infatuated with these high win rates, because they're not that special. In fact, they're dangerous from a viewpoint of, if your system produces like a 95% win rate, are you going to be disciplined enough to take the loss when it's that 1 out of 20 that doesn't work, right? Are you even going to be able to identify the 1 out of 20 that doesn't work? Because if you fight that 1 out of 20, you turn something that should have been a 1 hour loss into something that eats up a bunch of your wins. Whereas the guy who has a 40% win rate puts on every single trade going, this one's probably a loser. No big deal.
No, it's very interesting. It's two very different schools of thought when it comes to trading. I mean, like, one of them is the slow and steady wins the race, and the other is a gambler mentality. You know what I mean?
Yeah,
for sure. So can you talk briefly about how you define your edge and how you develop it, how you kind of like, where do you start when it comes to that?
Yeah. So like, if you want to talk about it in broader terms, like how other people might be able to find an edge, it always starts with trying to identify something in the market that you, one, can notice happening repetitively, and also something that most likely resonates with whatever style fits you best. And from that point, it becomes a matter of collecting a large sample size of data. I always tell people, cast a wide net. You want as many samples as you can, and not just setups that are an example of that trade working out. You want a lot of examples where they don't work. And your job as a data miner is to identify what parts of the setup or what pieces of data actually have a meaningful correlation to a positive outcome of that trade. You also want to find the things that you might think have a correlation to it, but it turns out through the data actually aren't correlated, right? And so I use Spike Heat, which is a data service. They, historical data, and you can pull really insane things. I'm not paid to say their name or anything. I would
I'm
never,
familiar.
yeah, I wouldn't promote a company that I don't use personally and believe in. And I'm telling you, I haven't found anything out there that cuts that. So like, I'm sure you're familiar with All Day Faders, and a bunch of other guys out there who probably been tracking data for years before Spike Heat actually had this product. And they'll tell you, man, it's like one of the most tedious things in the world to do it by hand, but it's necessary because without the data, you don't have the conviction.
Sure.
So it really is that shortcut to being able to get a huge sample size. So, in broader terms, that's your job, is to say, have a hypothesis and then search out data that either validates or invalidates your idea. And if it validates it and you truly do find an edge, a statistical edge, then it's your job to kind of refine it and really kind of go all in on it and focus on it to where you have it dialed in. Now, personally, for me, the edge I trade is a psychological, emotional edge based on emotional moves into significant levels on a chart, right? So over True Trader, we use scanners that, find large moves on, liquid big name stocks that are going into significant levels. And, we put the trade on to either take a mean reversion trade on it, or like I said, I've identified a few where, it may spike off the open, but then it flushes emotionally back into some support. And at that point, for me, that's more of a trend join. And so, different setup, different targets, different system. But it's all about, once you have that edge, for me personally, if the people on the opposite side of my trade are those people that are chasing the stock up and FOMOing in, they're, hopefully most people can like relate to this, right? Like you see a stock spiking and you rush to buy it because you don't want to miss it. And the second you put the trade on, you go, oh, you realize you messed up, right? And your fingers on the trigger, ready to bail out of that trade, right?
Right.
I want those people to be the people on the opposite side of my trade.
Of course.
Because, anytime that people are making an irrational, emotional decision, you have an edge over that person to take the opposite side of that trade. So for that reason, because it's rooted in psychology and behavioral human behavior, one, I don't think it's an edge that will ever disappear. And two, after you find a way to trade that edge, the second edge that you layer on top of that is your risk management, right? And so I don't think people even realize this, but your risk management is a huge edge. Not everybody has it. Not everybody even knows how to manage their risk. And like I said, when you have that aha moment that like, it's sometimes better to stop out more often in order to seek out that higher expectancy or that extra bit of profitability, that in itself is an edge. So hopefully,
do you feel like you're more actively looking for, like when you're trying to test a hypothesis, if you will, do you find yourself ever conflicted, like in like putting on blinders and only looking for things to confirm it and not actively looking for ways to disprove it?
Yeah. So, that was one of the issues when I first started with defining the edge I trade now, was like realizing that, when you're building this data set, you'll run into situations where like, oh, it just missed by like a penny hitting this level I need. And you'd be like, you're like putting it in your spreadsheet and you're like, no, you have to, it's not like, is my goal to impress people, or is my goal to identify a legitimate edge? Because part of the human ego wants to like butter it up and like massage the numbers, but the other part needs to be like acknowledging the fact that like we have a goal here, and that is to know with 100% conviction that there's a statistical edge here. And the only way to do that is to be 100% honest with every single piece of data
you have collect. To be a robot, right? Like you can't, like the moment that you bend the rules is the moment that you're involving emotions, and that's what you're trying to avoid, right? I mean,
yeah. And I always tell people, because like I've tried to kind of guide people onto the same path, right? So that they can I'm like, dude, I could tell you the statistics and the data I found, but it is never going to impact you the same way it impacted me from doing the actual work.
Right.
And so like, but I want everyone to experience it, because there's this feeling that you get the first time you start to see those aha moments that will literally make you smile ear to ear, to like know that you're just like, dude, this is amazing stuff right here. And like, the only way to get that is to do the work. And so like, I have been trying to like guide people down that path. And like, I tell people all the time, like, I'm like, be very strict about like the data you collect, because I tell them, you know, you're going to run into those issues. And it's not wrong to like, let's say that we identify a level that this is where the trade should be valid, right? Well, a lot of people go, well, I want to take that trade like 30 cents in front of that level. I'm like, okay, if that's what you want to do, then you need to track that data. You can't just track the data for when it hits that level. So you got to be like pretty vigilant about that.
Of course.
And so, you know, and the other part of me is always telling them like, dude, like, stop trying to front run the level. Like, if you track the data, you'll have numbers to prove that, don't worry, that level gets hit plenty times, right? It's not about quantity, it's quality. And
right.
you
want to take the nuance out of it, essentially.
Exactly.
For the guys that are, you know, trying to find their way in this business, what do you see as some of the biggest hurdles to get by, you know, to succeed and to make it for the long haul, to not be a part of the 90%?
The first is probably just people following, right? And, you know, they want to just be told what to do. And it usually just handicaps them and like slows down their growth. Because most people, I mean, those alert services there's so many out there. And, you know, even if you make money on somebody's call, you're not guaranteed to be able to continuously do that. And on top of that, you haven't learned anything. And if that person were to just close up shop and be gone, where's that leave you? Right. So
right.
I highly recommend finding a mentor. I mean, I know you've heard me talk about that, and it's, you know, make sure you guys understand the difference between a mentor and an alert service. Like, you know, a mentor shouldn't just be like handing you fish and being like, hey, short this here and long this here and sell this here. It's
right.
No, like, you guys need somebody that's going to kind of shortcut that learning process and tell you, like, you know, there are certain things in the market that are legitimate edges. And if you look here, you may find one, right? But the real truth is that even if you find a mentor, there is no substitute for the actual hard work, like the real work. Some people really do well and flourish when they're under that kind of situation where like they realize it takes that work, and other people like just shun away from it. And if you're the type of person that doesn't like that hard work, it might just not be for you, right?
Right.
I'm
it
not
seems
gonna...
like the guys that really that last are the guys that you know, march to the beat of their own drum. You know, I mean, it sound like a broken record because I feel like that's come up on this podcast so much, but, you know, truthfully, you need to discover what works for you, you know, and following somebody else's lead is not the answer, at least to a sustained career in trading.
Yeah. Well, I mean, if you just find a YouTube video that tells you how to like trade a moving average crossover, it's like, if everybody's doing the same thing, then that thing is not going to work, right? It just is what it is.
Of course. Well, I mean, that's kind of one of the reasons why, you know, any type of trading system, any type of strategy needs to adapt. It needs to adapt to market conditions. It needs to adapt when more people are looking at the same thing. It'll be less effective. Nothing lasts forever. You know what I mean? There's certainly some.
Well, I always put nuance on that same thing, because I hear a lot of people say that. And the nuance I add to that is very few things are forever in the market.
Right.
Okay. Like, one of the few things that you can go back in charts dating back to when they were still hand drawn, right, is you will never find a time in the history of the market where a stock could go higher without making higher highs and higher lows, right? Like, that's an objective, fundamental truth about the way stocks move. And it can't go lower without making lower highs and lower lows. So like, I always put a large emphasis on acknowledging the things that are objective truths, right? Because there's very few of them, really is. And the way stocks move via a trend is one of the few fundamental truths about the market that will always be and has always been true. And if you can find a way to build that into your system, somehow, if just reading what the stock is doing based on the trend, you can build things around that will be better at standing the test of time because they will always be there. Now, there are other things, a lot of things, right? There's so many strategies out there that work one way in one market and suck in another market, right?
Right.
And that's just the way that is. So you kind of have to acknowledge where you're at, what your system is. That stuff you got to track too. Mike Bellafiore, shout out to him and SMB for turning me on to a really cool thing to track. And that was tracking VIX, tracking volatility to see how your system trades in different volatility markets, because I never even thought about that. And it turns out, for the way I trade, if you're trading emotional moves into levels, VIX is kind of important, right? Like, how big is an emotional move if VIX is at 30? How big is an emotional move if VIX is at 15, right? So, I'm always trying to learn from everybody out there. I take bits and pieces of all the stuff that people teach and I make it into my own, but it's a never-ending journey, that's for sure.
It is indeed. Well, Ricky, that's all I have for you for today, but what are you thinking about Traders for a Cause this year? Are you going to be in attendance again?
I will. I wouldn't miss it, man. You guys put on such a good event. It's an amazing cause, but it's also just an amazing event, right? Like, it's so fun to see all the other guys, especially after COVID's been so protracted out and, we go months and months without seeing a lot of our friends. Definitely looking forward to it this year.
It's so unique, isn't it? Like I try to describe it to people who've never been. And I think a lot of people like to lump us together with like the Traders Expo. And I'm like, no, you don't understand. It's not like that at all. Like, it's almost like more of a gathering of friends than it is like a seminar, like it has a kind of a unique vibe and it's really indescribable. You just kind of have to experience it. Right. I mean,
yeah, I've been to two, and I remember the first one was like, I was hooked. I was just like, dude, I was bummed out because the first one I went to was the last one before COVID. And I had to go, like a year and a half without one. I was like, dude, please have it this year.
Well, I think there's no reason why we won't be back in the fall, especially we pulled it off in 21. And I hear this every year that it gets better and better, but 2021 went over great. I thought it was, a taste of normalcy in the midst of the pandemic. And I think that maybe we'll be in a different position come the fall. And I think we'll be back. I'll be back in person again. So,
well, from me to you, big thanks for all the work you do to put that on, because I know it's not an easy task. I'm surprised you're not fully gray beard, but
well, so far so good, but that could change. That could change very quickly. I think that honestly, I enjoy it. I feel like it's rewarding. I feel like the organization has come from its infancy into, becoming this thing. And the feedback is what keeps me going, and everybody just telling me how much it's affected their careers and how it's, really influenced them and inspired them to make difference in the world. And as you know, in our industry, we need as much of that as we can get. So I appreciate you being with me, and we'll probably be doing something virtual this spring. So I'll keep you in the loop and we'll let you know. And in the meantime, I'll ask everybody to trade, profit, and make a difference. Ricky, thanks for being with me. Take care, everybody. See you next time.
Thanks for having me, Zach.
All right, you bet. Yay. A Yeti with a webcam and a pair of headphones and everything. So, actually get them to sound good and not like they're, on a burner phone in the middle of the desert. All right. What is your title at True Trader?
Resident asshole.